Hello everybody out there in YouTube land. Our daily horizon view, the date is the 5th of the 4th, 2019. Today's spotlight is ASX QPON, which is the BetaShares Australia Bank Senior Floating Rate Bond ETF. And as always, this is our top 5's, the ASX Exchange Traded Funds. Quick overview of what happened on the close at the end of Friday. We closed down 0.79% at 62.70. Commodities were a little varied. We had a rise for gold and silver, and crude and associated petroleum products were predominantly up. So our top 5 percentage rises today had ETP MPT, which is our physical platinum. Then we had IZZ, which is the iShares China large cap ETF. GDX is our gold miners. And then after that we had CETF, which is the Van X, Vectors, China AMC, CSI 300 ETF. Then we had IAA, which is our iShares Asia 50 ETF. So looks like a few people chasing some exposure to China and Asia in general for our top 5 rises. So the Platinum ETF was up 4.3% on volume of 500 trades. So 500 shares, I should say. Top $5 falls, we had ETPMP, which is a physical metals basket, HAC, IDH, ILC, IOZ. So as we all know, HAC is the global cybersecurity ETF from BetaShares. IDH is the iShares S&P ASX Dividend Opportunity ETF, and that invests primarily in Australian listed securities. Then we had ILC, and ILC is the iShares S&P ASX 20 ETF. And lastly, there we had IOZ, which is the iShares Core S&P ASX 200. Top $5 rises, we had our ETPMPT, which is the physical platinum ETF from ETFs, so that's ETF securities. Then we had IHVV, IJH, IZZ, and IAA. So as most of us know, IHVV is the iShares S&P 500, and that's hedged to the Australian dollar. IJH is the iShares S&P Mid-Cap 400, so that tracks the mid-cap sector in the US equities market. IZZ is the iShares China Large Cap, and as mentioned before, IAA is the iShares Asia 50 ETF. ETPMPT, we saw a rise of 0.433% on pretty low volume. So top $5 falls, we saw our physical metals basket fall, and that was down 4.65% on very, very low volume, 186 traded. VAP, IAF, A200, and CURE. VAP is the Vanguard Australia Property Index. IAF is the iShares Core Composite Bond ETF. A200, as most of us know, that's the BetaShares Australia 200 ETF. So there's been quite a bit of movement in the ETF space in the last week. So we had 270 million inflows from the broader market. So people selling down physical shares and buying into ETFs. And of that 217 million, 118 million of that went into A200. So that's gone from a value of 400 million to a value of over 520 million or thereabouts, 530 million market cap. So QA is the ETF's S&P Biotech ETF. So top 5 number of trades, we saw VAS, VGS, STW, VAP, and IBV. So VAS had roughly double the amount of trades of VGS. As most of us will know, VGS is a Vanguard Australia Share Index ETF. The others are quite common as well. Expect that to figure in the last 2. So top 5 for volume, we saw QPON, VACF, NDQ, STW, and OZR. So 2 or 3 ETFs that we don't typically see on high rotation, although we see QPON a little bit, and we'll go into that one in depth later. And I chose this because just on the sheer volume. So we've had no movement in price, but there's just some serious volume going through. So 1.1 million shares traded on Friday's market, and also VACF, which is another, that's the Vanguard Australia Corporate Fixed Interest ETF. That one tracks the return of the Bloomberg Australian bond credit, so plus 1 year index. So that had almost 500,000 traded as well. So that tells me there's people moving into more defensive type ETFs. NDQ is the NASDAQ 100 ETF. STW is the State Street Spider S&P ASX 200. And OZR is the State Street Spider S&P ASX 200 Resources Fund. For the top 5 in value, we saw QPON again, which is no surprise. VACF again, which is no surprise. Neck and neck for value. Then we had STW, IVV, and AAA. So out of the top 5 for value, we saw 3 of them being bond-related products or short-term interest rate products. So AAA, as most people know, that's one of the larger ETFs in the market as well. So that's the BetaShares Australia High Interest Cash ETF. So if you want to park some cash into that and get your 2.09%, I think it is, roughly 2% dividend paid per month. That fund invests in high interest credit accounts in Australian banks, like ANZ, CBA, and NAB. VACF, we went over that one just before anyway, but so that's another interest rate. But looking at 4 to 5 times the volume for the top 2 trades. So definitely people moving into more defensive type assets. So quickly along to our spotlight. So the spotlight today is ASX QPON, which is the BetaShares Australia Bank Senior Floating Rate Bond ETF. Provides exposure to a portfolio of some of the largest and most liquid senior floating rate bonds issued by Australian banks. Aims to provide attractive and regular income distributions combined with a high level of capital stability, so you don't see a lot of change in the share price of these things. Expect to exceed income paid on cash and short dated term deposits, so better than term deposits at the moment. So the assets are invested in a portfolio of senior floating rate bonds issued by Australian banks, as mentioned previously. So the eligible bonds must have an outstanding, so they must be at least $500,000 on issue and return a maturity of between 1 and 5 years. So no ultra short-term bonds as part of the portfolio. At least 80% of the total portfolio weight allocated to bonds issued by the following eligible banks, so ANZ, Commonwealth, National and Westpac, and they're weighted equally. Up to 20% of the portfolio is weighted allocated to bonds issued by the following banks, so AMP, Bank of Queensland, Bendigo, Macquarie, and Members Equity and Suncorp, so they top it up with some bonds from the smaller banks. Flash through it all. So our net asset value was roughly $25.60. Close of trading on Friday was $25.62, so marginally above the net asset value. Management cost was 0.22%, which is quite reasonable. Distribution frequency is monthly. Dividend yield is 2.7%. Regular attractive income, as we've just mentioned above. So the ETFs is designed to exceed income paid on cash or short-term dated term deposits. So as interest rates go up, the return on this fund should go up as well on the ETF. So historically, Australian bank senior floating rate bonds have had a high level of capital stability and limited capital variability during market declines. So the floating rate bond has historically exhibited low correlation to equities as well as defensive characteristics during market declines. So in my opinion, this ETF might be a good tool to have in your toolbox if you're looking to manage potential downside risk in a market that has the potential to become choppy in the near future. According to all the learned people out there, there's lots of bad or negative news and predictions, I suppose, but take it all with a grain of salt, make your own mind up. If you're looking for some alternatives to gauge your research before you buy or before you make your own decision, I'd also have a look at AAA, which is our high interest cash, and VACF. That's the Vanguard bond ETF as well. Just a quick snapshot on the performance. So you're looking at 3.06% since June 2017, and you can see the returns. And also you've got our chart there showing the same information effectively. So factual information, as good as I can produce, it's definitely not advice on any particular product or purchasing any particular ETF. Should always be doing our own research and taking our own financial circumstances into account. We want to crack our financial sky. Woo! So give us a thumbs up, go subscribe. We're trying to get better production-wise and all the rest of it. So keep an eye on us, what's happening, and also leave a comment if you think there's something worth commenting on or you would like to see a specific ETF looked at. Thanks. Ciao.